Managing risk is all about preparing for the unexpected. Although we don't know exactly what future risk will impact us the most, we want to be prepared for anything. Risk management is much more about giving our future selves options and opportunity than it is about being right. It's much more productive to acknowledge what could happen and prepare for it than it is to simply hope for the best. As Morgan Housel wrote in his book, Same as Ever, look at the big news stories that move the needle. COVID-19, 9/11, Pearl Harbor, the Great Depression. Their common trait isn't necessarily that they were big, it's that they were surprises on virtually no one's radar until they arrived. We all know that life has a way of doing its own thing, and no amount of hope or wishful thinking will make us immune to bad luck or negative events. Preparing for risks doesn't make them any more likely to happen, but it does put us in a much better position to limit their impact on us. Understanding the relationship between risk and investing is important. Often our default is to believe that investing is risky, but when we examine it closely, we find the opposite. Inflation reduces our buying power, essentially making what money we have less valuable over time. If our money isn't at least growing at the rate of inflation, it's actually losing value. We don't want to just maintain what we have, we want to grow it. If our money isn't growing at a rate higher than inflation, it's going to be impossible to build wealth. Investing properly puts our money in a position to outpace inflation, which builds wealth. This eliminates the risk of inflation while making our long-term goals more probable to achieve. This all reduces the dependency on our income to achieve our goals because our money is working for us. We also looked at 3 main ways that we can manage risk as investors: with our investment approach, with safeguards, and with our behavior. By understanding how investing works, we know that there's nothing that the market can do that will lead to our demise, and our goal should be to invest for as long as possible. This requires us to create a portfolio that can weather any storm. Our mindset should shift from wanting to get the highest return in any given year to wanting to get very good returns for as long as possible. Using a diversified portfolio puts our money in the best position to survive and thrive for as long as possible. We don't know who the winners of the market will be, so history shows us that it's best to own it all. If we already hold the companies that will move the markets the most, we don't have to feel FOMO when they start to take off, because we already own them. Since we'll be investing for decades and decades, we need to do so in a way that we can understand and doesn't cause us to lose sleep at night. If our goal is to invest for as long as possible, we want to ensure that we're not in a position of having to rely on our investments before we really truly need them. Safeguards are funds or sources of funds that we can put between us and our investments, ensuring that we can leave our investments alone to work for us. Safeguards can take the form of savings, an emergency fund, types of insurance like disability and critical illness, and our financial habits, like spending less than we make. At the end of the day, our own behavior is really what dictates whether or not we are successful investors. Even if we do everything else right, if our behavior is working against us, it's going to be impossible to achieve the success that we're looking for. Our behavior is the most likely thing to send us off course, but also the thing that can best keep us on track. Investing is all about doing the right things for a very long time. There are going to be some universal right things that we'll want to do, like proper asset allocation and diversification. But a lot of the specifics are going to come down to our values and what matters most to us. When we make decisions that reflect what matters most to us, it's easy to keep accountability of our behavior. As long as we're moving towards what matters most to us, we're doing the right things. We often view investing risk as a chance of losing all of our money. But when we invest properly, we completely eliminate that as a possibility. Managing risk is not about picking the best investments, taking chances, or being smarter than anyone else. It's about creating systems that give ourselves and our future selves options and opportunities. We want to have the freedom to make decisions instead of being forced to make decisions at an opportune time.